You've probably heard about interest rates are changing once again. Maybe your friends are saying, wait for rates to drop, or maybe you feel unsure about whether now is the right time to buy. In this video, I'm going to break it all down, what's really going on with interest rates, how they impact your monthly payment, and what smart buyers are doing right now. And here's the good news. You don't need to feel stuck or scared. You just need the right plan. I'm a mortgage broker and I help first-time buyers in California every single day. And just last month, I helped a couple lock in a great rate and buy their dream home without waiting on the perfect market. So let's talk about what all this means for you. All right. Let's start with the big question. What's going on with interest rates right now? If you've been watching the news or scrolling online, you've probably seen a lot of mixed messages. One headline is saying rates are dropping. The next day, rates just went up again. It's confusing, and honestly, it's totally normal to feel unsure right now. Here's the simple version. Interest rates have been bouncing around a lot. Sometimes they'll go down a little, then they'll go back up again. It's kind of been like a roller coaster, but one that nobody really enjoys riding. But why is this happening? Well, most of it has to do with inflation. That's when the prices of things like food, gas, and rent go up. When inflation is high, the government usually raises interest rates to try and slow it down. It's one of the tools the Federal Reserve uses to manage the economy. So when inflation gets better, we often see mortgage rates improve. When inflation gets worse, rates tend to climb. Now, I want to be real with you. Rates today aren't what they were in 2020 or 2021 when we saw super low interest rates around 2 to 3%. But they're also not sky high. In fact, if you look at the last 30 to 40 years, today's rates are actually pretty average. And here's the key. You're not just buying a rate, you're buying a monthly payment that fits your life and your budget. Some buyers get so focused on the rate that they miss out on a great home. But what really matters is, can you afford the monthly payment? Do you love the home? Is this the right time for you and your family? And don't forget, if you buy a home now and rates do go down later, you can always refinance and lower your payment down the road. So yes, rates are changing, but that doesn't mean you should wait forever. What you need is a plan that works for you, not just for the market. Let's talk about something really important. How do interest rates affect what you can actually afford to buy? It's simple really, but super important to understand. Let's say you're thinking about buying a home and you've got a monthly budget in mind. Maybe you're comfortable spending around $4,500 to $5,000 a month for your mortgage, taxes, and insurance. Well, here's the thing. The same $4,500 to $5,000 a month can buy you a very different home depending on the interest rate. Let's say rates drop to around 5%. With 5%, your $4,500 to $5,000 a month might let you afford a home that costs around $700,000. But if rates jump up to 7%, that same $4,500 to $5,000 a month might only afford you a home that costs around $600,000. See the difference? That's why interest rates matter so much. Even a small change, like a 0.5%, can affect your buying power by tens of thousands of dollars a month. But here's something to remember. You're not locked in forever. If you buy a home when rates are higher, you are not necessarily stuck with that rate for life. If rates drop later, you can refinance, meaning you could swap out your old loan for a new one with a lower interest rate. That can save you money over time and lower your monthly payment. Here's my advice. Focus on finding a monthly payment that feels comfortable. Get fully pre-approved so you know your numbers. Don't guess, run the real math. And if you need help figuring that out, that's what I'm here for. I can walk you through the numbers, show you what price range fits your budget, and help you build a plan that feels good now and later. This is one of the biggest questions I get from buyers right now. Should I wait for rates to drop or should I buy right now? It's a great question, and the answer really depends on your goals, your finances, and what's happening in the market where you live. But let's break it down so it's easier to understand. Waiting for perfect can backfire. A lot of people think if I just wait a little longer, rates might drop and prices might come down. But here's the reality. In many parts of California, home prices are still holding strong. And if rates do drop, what happens? More buyers jump back in and competition goes back up. So even if rates go down, prices might go up. When is the right time to buy? The best time to buy isn't when the market is perfect. perfect. It's when you're ready. Here are some signs you might be ready. You're tired of renting. You have steady income and savings. You're planning to stay in the area for a few years. You want to start building equity and investing in your future. If that's you, it might be smarter to buy now at a price and payment that fits your budget. Remember, you can refinance later if rates do drop, but you can't go back and buy the perfect home once it's gone. Bottom line, don't wait for perfect. Wait for the right fit for your life, your finances, and your goals. Let's talk about something you might have heard about lately: adjustable rate mortgages, or ARMs. With rates as high as they are, some buyers are asking, should I get an ARM instead of a fixed rate loan? Let me explain what that means and how to decide if that's a smart move. What's an adjustable rate mortgage? An ARM is a loan where your interest rate is fixed for a certain number of years, and it can change based on the market. For example, a 5/1 ARM means your rate is fixed for 5 years, and then it adjusts once a year thereafter. A 7/1 ARM means your rate is fixed for 7 years, and then it adjusts once a year after that. The starting rate on an ARM is usually lower than a fixed rate. That means your payment in the first few years can be more affordable. Here is when an ARM might be a good option. If you're planning on selling or refinancing in the next 5 to 7 years, an ARM could save you money up front. Here's an example. Let's say a 30-year fixed rate is 7%, but an ARM might start at 6% or even lower. That 1% difference could save you hundreds every month in the beginning. But there are also risks. After the fixed period is over, your rate can go up, and that means your monthly payment can go up too. So if you plan to stay in your home for a long time, an ARM might be risky. You don't want to be caught off guard with a surprise payment increase years down the road, especially if you can't refinance when the time comes. So what should you do? Ask yourself, will I sell or refinance before the rate adjusts? Do I have room in my budget if the payment goes up? Am I uncomfortable with a little uncertainty? If the answer is yes, an ARM could be a smart strategy. But if you want long-term peace of mind and a payment that never changes, a fixed rate loan is still the safer choice. Remember, every buyer is different. I can help you compare both options side by side and find the right fit for your goals. All right, let's do a quick recap of what we've talked about today. Interest rates are changing again, but that doesn't mean you have to panic. The Fed isn't lowering rates yet, but that could change later this year. If rates do go up, waiting could cost you more each month. If rates go down, you can always refinance later. Focus on what you can afford right now and look at the big picture. And don't forget, some buyers are using adjustable rate mortgage to lower their payments today. So here's the next step. Call or text me today. I'll run your numbers, help you understand your monthly payment, and explain your loan options to you, whether you're ready now or just starting to plan. Buying a home doesn't have to feel confusing. I'll walk you through it step by step and make sure you're confident every step of the way. If this video helped you, please hit the like button, subscribe to the channel, and turn the bell on so you don't miss future updates. And drop a comment below. Let me know your biggest questions about interest rates or buying a home in California. Thanks so much for watching, and I'll see you in the next video.